Hello and welcome to this webinar about the wine market. Today we're going to discuss the recent geopolitical situation and how to position your portfolio in this changing world. My name is Lars Granat and I'm today joined by Rune Splidt, Commercial Director of Rare Wine Invest. And Rune, what can the viewers expect of this webinar?
Lars, we're going to give a lot of insights about the giving market situation and in general what we believe the future will look for a wine investment. So we will be focusing a lot on under the umbrella in the Rare Wine Group on Rare Wine Invest as you know it today. You know Nordic Freeport where your wines is stored either in Denmark or in the UK. But here in the beginning, I think it's actually extremely important from my point of view, representing the blue part of the business, to give some insights about what Rare Wine Trading is all about. Rare Wine Trading is a top three globally trusted supplier of fine ware and rare wine, including spirits as well. We have been operating in that market in almost 20 years now. It is also in that department that involves our founder Rasmus Nielsen and our CEO Mads Jensen, where they have their typically day-to-day operation. Purchasing wine, selling wine, gathering a lot of knowledge. And the trading department is also the big wheel when it comes to business revenue in Rare Wine Group, representing close to 80 to 85% of the general revenue in the company. So from my side, it was important that we had some insights about Rare Wine Trading. It is also a part of the company if you want to have more insights about that giving company within the Rare Wine Group. Please reach out to your advisor. They will give you a lot of feedback on that one. Lars, the agenda for today then.
Yeah, let's take a look at it. First of all, you have already mentioned Rare Wine Trading and all the data we collect from Rare Wine Trading. We do use them to do our market analysis. For the first part of this webinar, which we have separated in two sections, for the first part, I'll try to take you through the wine market as it is right now. And after that, we will go to you, Rune, and go through some of the questions that we have collected from you investors before this webinar. And I also want to let you know that you can ask your questions during the webinar. You can do so by clicking the Q&A button and type in your questions. Within the next 30 minutes, we'll try to cover as many of your questions as possible, but of course we have reserved time for that in the end. If your questions are not covered tonight or this afternoon in the webinar, we will make sure that our team will reach out to answer your questions personally tomorrow. So we will collect all questions and answer after the webinar. First of all, we'll take a look at the wine market right now. We'll take a look at what's going on in the world, the situation with Trump, the tariffs, the currency fluctuations, and what you as investors can expect. Also, we'll try to come up with some guidelines on how to navigate this current market. And then, of course, we will move over to the questions. But I think let's get started. Because due to the geopolitical situation, we are seeing a lot of uncertainty in the market right now, but there are also a lot of opportunities. And this may be the time in history where opportunity and uncertainty go hand in hand, maybe now more than ever. So let's take a look at what we're up against. First of all, I would like to address the tariffs because that has been the talk of town for the past couple of months. And the tariffs, just to put it into perspective, I've created a timeline here that goes through the tariffs that we have had recently. And this is not something new. We have actually seen it all before because the situation in 2019 was also that the Trump administration was in charge. And back then in 2019, they implied a 25% tariff on certain wine types, among them most French wines, though champagne was exempt, so was Italian wine. But back then, the tariff was 25%, and it was more or less equally absorbed between the producers and the importers, but also by the merchants and the consumers. That led to slight price increase at the time. It was more expensive for an American buyer to buy a bottle of Burgundy wine. Moving forward a bit to 2021, when the Biden administration took over, they decided first to suspend the tariffs, and later the same year, they actually canceled the tariff. So we were back at 0% tariff. That was good for the wine market. Things fluctuated in a positive way. The market was filled with activity, and we also had the pandemic at the time, which led to even more power, more spending power in the market. So it was a good time for the wine industry in general. Moving a bit further on the ladder here, back to or up to November 2024, when Trump was elected for his second term as the president. And back then in November, the first speculation started. Will we see another tariff? Maybe we will, maybe we won't. Nobody knows. Will it be 10%? Will it be 25%? People were starting to guess. And that also led American importers to buy up in European wines because they probably wanted to make a profit if there at some point would be tariffs. So that led to that warehouses, the layers in the US are filled at the moment. And therefore we also see that American merchants are not at the moment searching for a European wine as much as it did back in November due to the speculation. In March this year, we had maybe the worst crisis because speculation started that Trump would come up with a 200% tariff on all European wine and spirits. It was just threats at the time, and it did not end up that way. Luckily, it didn't, because a 200% tariff would be a massive thing in the wine industry and would certainly reduce the trading activity for European wines in the US. But what we ended up having was a 20% tariff was announced on Liberation Day, the 2nd of April, 2025. And that was put together by two tariffs. First, a universal tariff of 10%, and then another reciprocal tariff of 10% on European produced wine and spirits. And that ended up with the 20% that we had for a few days at least. Because just a few days later, on April the 9th, Trump administration suspended that 10% reciprocal tariff and led us down to what we are now. Right now, we are on a 10% tariff for wine produced in the European Union, imported into the US. And what we are most likely going to see in a couple of months' time is that the suspension ends and the tariff will be back onto 20%. But what can happen in the meantime is that diplomats do their work and we will maybe end up with the 10%, maybe we'll end up without tariffs at all. Nobody knows for a time being. And therefore, still a lot of speculation is going on in the wine world. And people have paused their buying up of wine because they are playing the waiting game, waiting to see what is actually going to happen and can we benefit from it or can't we benefit from it. So right now, we do not know. The only thing that is for sure is that we right now have a 10% tariff. Furthermore, what we're seeing in the global economy is that the euro stands stronger than ever. For the time being, in 2025, the euro has outperformed other currencies. For instance, the US dollar and the Hong Kong dollar have lost approximately 10% up against the euro, which is leading to wine produced in the European Union being sold in euros are suddenly becoming more expensive for an American buyer or for a buyer from Hong Kong. And same thing, just to a slightly less extent, is seen with the Japanese yen and the British pound, which has also depreciated up against the euro, making it more expensive to buy wine produced in the European Union. And that, in general, is making sure that purchase power in the market is declining at the moment due to the very strong euro. And finally, the last thing here on my slide is the very uncertain situation that we're facing on a global level, because the uncertainty, the speculation about trade wars and the ongoing trade wars, the real wars we have in the Middle East, we have in Ukraine, are making it much more difficult to navigate in the market. We don't see that just in the wine market. We see that in every market at the moment. Investors do not know what to do. They do not know whether to be exposed towards the stock market or go in another direction. They don't know whether to go left or go right. And that is leading to, both a hesitation, but also a very passive behavior. And all those things added up means that right now, the professional wine market is asking a higher risk premium because they do not know what will happen to the market on a short-term basis. And therefore, they avoid taking up large stock. And therefore, they will ask to buy at a lower price. So markets are under pressure due to all these things that we are seeing. Another thing worth addressing is the en-primeur, which the en-primeur system for ages has been the primary fine wine trading mechanism in the fine wine world. But the en-primeur lately have seen a lot of challenges. That is what we have referred to as the Bordeaux paradox, and also why we have advised against investing in the Bordeaux en-primeur. What the case is here is that we have seen chateaus selling wine up at the en-primeur to a higher price year after year after year. But at some point, the price has become too high, especially considering that the Bordeaux wines are not that much in demand as they were 50 years ago. So we are having a oversupply in the markets, which is eroding the confidence in the market, which has led to overpricing. And to accommodate that, the en-primeur last term, the 2023 en-primeur, the producers tried to lower the prices with approximately 25 to 30% for some producers, which is a lot. And what we expect of the 2024 en-primeur, which we are going into in just a short period of time, well, that is prices will be lowered once again. And if that happens, which is the most likely scenario right now, merchants and collectors who have invested in the recent Bordeaux campaigns may now be holding up stock that is suddenly overpriced relative to the newest release. That will result in a widespread devaluation of the en-primeur holdings. So it's not that secure of a place to invest your money, and that is why we at Rare Wine have invested in or advised against investing in the Bordeaux en-primeur. Another thing, another trend that we have to address when speaking of the wine market is wide media speculation about is consumption declining among the younger generations. And yes, in fact, it is. The younger generation, the so-called Generation C, they do not drink as much wine as the generations before them. So it is correct that we see a consumption that is declining. But what Gen Z is preferring is actually premium wines. They are searching for wines of higher quality. They want quality over quantity. So we are more in the fine wine industry talking about a premiumization, which is really good for the fine wine market. And it's also good for you as a wine investor, because the younger generation, the Gen Z, they are taking some conscious choices. They prefer wine that is being produced organic or biodynamic, as we are seeing in Burgundy, seeing in Champagne and some parts of Italy as well. And that in general will lead to a search for better wines and wines of a higher price, which in this case is also the wines that are very suitable for investment purposes. Another megatrend that we are facing is shifting diets. We have seen that, especially from the Gen Z again. They have health considerations. They have environmental concerns. They have ethics and all kinds of other things, leading them to eat more plant-based and more organic diets. And by eating lighter diets, you will also need to consume wine that is lighter, that is better for your diet. So the light wine types, which are, for instance, the sparkling wines, it could be Champagne. It could also be white wine in general, white Burgundy. It could also be the more light types, red wines. Again, for instance, elegant Burgundy wine. They will be preferred in the future more than the more heavy red wines that we saw in the past, due to this megatrend of shifting diets. Moving from there to the climate change, which is also a topic in the wine world that we need to address. What we have seen in Burgundy most recently, the harvest last year, Rune and me, we were there, both of us, discussing the harvest with the winemakers. Some of the winemakers in Burgundy reported that their red wine harvest was reduced by up to almost 70% in some places. And speaking to the white wine producers, we were talking harvest yields that were only half the size of a regular harvest. And that was 2024, the most recent example. But we have seen the same pattern in 21, in 19, and in 2017 as well. We are experiencing the climate changes for real now, and it is becoming more and more difficult for a wine producer to predict the yields. The yields are more volatile, and that will lead to a reduced access to the most iconic wines, as we have here on the slide. That combined with the demand will for sure drive prices up on a longer scale, and that's why we have mentioned the ultra high net worth individuals here. Because that segment, or for sure one of the segments that buy a lot of fine wine, and especially some of the most expensive ones. And what is expected is that we will see a growth of around 30% of ultra high net worth individuals in the period from 2023 to 2028, leading to more and more consumers or potential consumers coming into the market. Whereas on the other side, we have the declining harvest yields, leading to a imbalance between supply and demand. And also worth remembering when discussing the wine market is the wine market actually has shown stability over the years. Here I have collected data of 20 years, both from the wine market, but also from other assets just for the comparison. But 2025 has been a difficult year, no matter whether you invest in the stock market, in equity, and no matter what you invest in. So 2025 is not included in this slide, but up until 2025, we have 20 years of data showing that Burgundy wine, for instance, is up by 9.7% per year. Champagne is up by 8.5% per year over the period of 20 years' time. So historically, wine as a physical asset has shown a lot of stability. And that is, of course, also the potential that we still believe in. That was some historic data, Rune. But we also have to discuss selling wines and how it is to sell wines in a market like we have today.
Definitely, Lars. And I think the most important part here is to give some kind of overview to say that we are still selling a lot of wines every day. The positions that we sold and the numbers that you see on the screen now is, of course, the realized returns, the sold positions, and the holding period. A holding period being around 3.5 years, that is actually quite far from our recommendations, with somewhere between 8 to 10 years with a wine investment. But also, I think it's very important to understand who our and what is actually the market. We are talking so much about the market, but who is actually the buyers in this market here? It will be, in one category, other investors coming into the company like us, some of our competitors, that drives a wine investment business. But the other side of the road is the professional market, as what I mentioned before, the trading market. Those two main things are when we sell wines, are the markets with either selling to investors within our company or others, or to a professional market taking care of our trading company. So that is, Lars, the main reason when we do sales, it is through those two channels.
Absolutely. And just to sum up the situation in the wine market for the time being and why the wine market is under pressure right now, as we have already discussed, we have the global uncertainty, which lead to a temporary lack of purchasing power in the markets. We are seeing not as many people being interested in being wine investors or collectors that are not spending as much money as they did in the past. They are holding back. They are playing the waiting game, as we discussed. And on the other side, we have the Gen Z, who prefers quality or quantity. We have the ultra high net worth individuals growing with a 30% in 5 years' time. And we have an asset that has shown historical stability, a physical asset that has a lower limit. There's a lower limit for how cheap a wine could be before collectors start to buy up. So those are the main patterns in the wine market, and that is why we sometimes address the market right now as being a buyer's market, because we have a temporary lack of purchase power. But for you as an investor, playing the patience game is absolutely vital in these months, because the sales process will be prolonged due to all these things going on in the market. So staying true to your original strategy of a longer investment horizon is absolutely vital. Cool. From there, I think we should move over to section 2 of this webinar. It's all the questions, Ronan. We have collected a lot of questions on behalf of the investors in the past months. We have investors from more than 45 countries. We have, I think, almost 3,000 investors. So there are different questions here coming from different kind of markets, but I will try to give you one question at a time, Ronan.
Yeah.
And this is also a good time for you who are watching this webinar to type in your questions. You can do so by hitting the Q&A button and type in your questions. And by the end of the webinar, I'll try to ask some of those questions to Rune. And again, as I said in the intro, that there might be some questions that we do not have time to answer during the webinar. We will make sure to follow up on those and make sure you get your answers by tomorrow. Are you ready, Rune?
I'm ready. I hope
Perfect.
that I'm ready.
Yeah, I'm sure you are. Let's go for it.
Yes.
Well, the first question, and the question we have got various of times. Can I still trust wine as an asset class?
The quick and the right answer to that one will definitely be yes. I believe that if you look at it from a historical perspective, then you will look back at, let's say, where we stand right now in a time of crisis. I think that everybody can agree that we can define it like that. If we go back to 2008, if we go back to COVID, there we saw the same mechanisms, that the market was down for some months. And what we have seen in this case here is just that the period has been longer than we ever could imagine. So therefore, I believe that there are, of course, obstacles in the given market as we see it today. But also, why you should still trust wine as an asset class is that if you believe that the number of ultra high net worth individuals will keep having the curiosity and the interest of fine and rare wine, I believe that wine definitely has its space in a portfolio, and of course it is extremely important that you stay true to your strategy and the things that we recommend, that you have a long horizon in this given time.
Thank you, Rune. I'll try to move on to another question that we've had quite often. Are you still able to sell my wines, and how long time will it take?
That is actually two questions, but
Indeed it is.
I think maybe that sums up, Lars, when people are going to do a divestment of either the whole portfolio or part of the portfolios, maybe we should take those steps and what we see, and maybe as investors and others to come in the future, have a clear mindset about what is actually happening. We need, of course, to take a valuation of the given wines. And we do that by looking at, of course, My Rare Wine Invest to see what is the current valuation of your portfolio. But like every other commodities, such as real estate, cars, or others like that, we need to find the price today. And there we go out in the open market. If the valuation of those average are 100, based on third-party data like Livex, Wine Search, and other channels, then we use that data to go out and see how can we make this wine here attractive for a buyer in either a new investor coming in or in the professional B2B market. There we are searching, and the key here is that timing is everything. So if you put something up for sales together with a lot of others, of course it will have impact, and it will take more time than what we saw some years back. But I also believe that when you go out to an active market, a market where there is limited availability on these given wines, you will definitely sell higher. So again, having a long horizon here is key to the two questions.
Absolutely. Moving on to the next question. How do you manage exit timing in a slow market?
Yeah. Good question. I think that if we take a slow market, then we also need to reflect about, well, how was it in other times? And if you go back to 2021 or 2022, what we saw there was a very consistent and very attractive market where we could expect a selling time somewhere between 1 to 4 months. A lot of people were coming in through channels. New investors were bought into Rare Wine and our competitors in the market. The professional market was overwhelming with people wanted these different wines. So in that period, I would say between 1 to 4 months. Then the war between Russia and the Ukraine started. We were expecting a similar situation that what we're looking at COVID when we're looking at 2008. And maybe the time was increased with maybe to somewhere between 4 to 6 months. Then we're looking at today and coming back to the key, we need buyers. So even though that if the market is fast, if the market is slow, then we need a buyer out there. We are not in the same categories as the stock market where you put something up for sale and then the next day you have the money. We need, like real estate, to find a buyer. And if there is a lack of liquidity and not many taking their investments through wines, then the buyer segment is lower. So from where I'm standing today, and if I should put an estimate on how much time will it take, some positions within months, others could take a very, very long time to find the right buyers. And that is what we experience right now.
Thank you, Orne. The next question here. Why should I still buy when I have had a portfolio for years and with your commission, I am still losing money?
Yeah.
A good one.
Definitely. You should keep buying wines if you, like me, believe in the product and are convinced that there will be an imbalance between supply and demand again. We are back at the ultra high net worth individuals. We are back in imbalance between supply and demand. But of course, I understand investors coming in 2022 that has maybe bought at the top at that given time. And here in the last 2.5 years, haven't seen any positive gain on their portfolio. Maybe it's stabilized at a stable zero return, or it is down. With that, I would say, go back, have the conversation with your advisor. Let them know that where are you maybe nervous, how do you see it? But also be aware that if you're selling now, and now I just want to get out of this here, then you're looking into a market that is extremely difficult. And again, with time and horizon, what we have seen with this product here is that the time will be back.
Thank you, Orne. Next one. I think the Burgundy bubble has burst. Will it ever come back? And when?
Yes, and the second question I will come back to.
Okay.
Again, if you do a comparison, I think is it to use the word bubble. Do I believe that Patek Philippe in watches, a commodity where you invest in a watch, will that come back and will you have a higher gain on your watches, cars, etc. in the future? Yes. As an alternative investment, of course, Burgundy will come back. From my point of view, Burgundy is the same as you can see with the high watches and those watches that everybody wants. That is the same with Burgundy and the top Bordeaux wines, and of course also the champagnes that we do recommendations of. But in general, to ask about the Burgundy, will it come back? Definitely.
Thank you, Orne. And the next one I have here. Which specific wines have been most affected? That's very specific.
Yeah. Let's stay in Burgundy and then let's take the unicorn position. Of course, those are the ones that drop the most. Then I would like to go back to the ultra high net worth individual and that slide that Lars showed earlier on. There we were looking at North America, Asia, Europe as the top of the markets where ultra high network individuals will be in the future. If we then say that North America and Asia has been struggling a lot here, and those are typically the countries where the highest demand of these given bottles are, then definitely the top Burgundy, DRC, Loire, etc. has been hit hard, but it would also be the ones that bounce back the fastest. We are still seeing trades in our trading department. There is still a high demand for these unicorn wines. It could also be Arnaud Lachaud, that was a rising star in Burgundy, took an amazing journey. And now there is no interest from Asia, more specific China, regarding Arnaud Lachaud. And of course, the demand has then dropped a bit. If we look at Champagne, I think that the reason why and what have surprised us also is that the producers has done so much, many releases here over time. Taking Dom Pignon, for example, 2012, 2013, and latest 2015 is out there. But then again, if you look at the vintage and coming back to say, what can these do? Then take 2008. When we were starting to selling those back in I believe it was 2019 to a price of around 130 euros per bottle, that increased overwhelming to 240, and now has a price around 190, actually giving us the estimate about a 5 to 6 year horizon, with again that match the criteria of what our recommendations are. And with that, I can definitely say, of course, we believe in Unicorn Burgundy. Of course, we also see the strongest vintages in Champagne, and the top producers will definitely come back. But those are the ones that has been affected the most.
Thank you. The next question I have here: can you really call wine a low-risk investment? I am losing money. That's a good one too.
Yeah. Wine is not without risk, like any other asset classes. However, I find wine as a physical asset that the historical part shows that lower volatilities than what you see in other asset classes. Some months ago, Lars, I had a lot, and my team had a lot of conversation with investors saying that their stock portfolio was outperforming wine, and I could say with my own stock that was also the case that I was looking into. But I'm not having that much of those conversations here and now.
Can imagine.
So I think in general, if you stay true to a long-term horizon on your investment, the selection of the right producers, the right vintages, then you will see that in the future it will be low risk, and it will be with a good and promising capital gain on the positions.
Moving on to next question. That's a long one. Are wine investment returns still decorrelated enough from traditional markets to justify their role in a diversified portfolio?
Yeah. The majority of our investor base is still seeing very strong returns and portfolio performance. Over time, we have demonstrated that this type of investment absolutely has its place in a diverse portfolio. Burgundy is still the main driver here, together with Champagne. It is, in a Burgundy perspective, the micro production that is key. And as what I have mentioned before, we are still seeing a lot of activities in trading department. Now I'm mentioning the trading department also. We also have wines moved into other investments investors that are focusing on that. There is a lot of options, but in general, so. My question is, yeah, definitely.
Definitely. Cool. We're approaching the end of the webinar. I think we will have this question and then two more from the live section of questions. It's a really good one. I know. I wish I knew the answer to that one, but maybe you do, Rune. When will the market rebound?
While the exact timing is uncertain, recent signs with a patient investor, I believe that we will see light and stabilization faster than expected. I believe that before the Trump administration went into all those topics that you mentioned, there was starting to be more and more light in the trading department. And in the trading department is again the focusing on, there is where it all starts, where we can see the mechanism in the market, more requests coming in from countries that has maybe been low performing in some time. But in general, I believe that there will be light faster than what we expect. That said, Lars, I can also only say that there will be some tough sales here in the coming period. So maybe some of you have your portfolio up for sales now, maybe other are considering putting it up for sale. It is a slow market. But of course there is a market, but there will be tough time in the selling period here when we look into the coming month.
Patience is key again.
Yeah, definitely.
Absolutely. Cool. Now I'll try to find some of the live questions, Rune, if you can.
Yeah, while you're doing that, Lars, I can make a recommendation that you go into to My Rare Wine Invest, and Lars and his team are giving a lot of feedback, a lot of insights about how the market is reacting. You can follow those news, and then you can see and read all other steps regarding market insights and what we believe in the given market.
Cool, Rune. I have a question here from a person called Carsten, and Carsten is asking about how does Rare Wine look at Italian wine?
Yeah, good question. I can talk directly to you now, Carsten. But Carsten, the thing is that, and for others also, I believe that Italian wines has been more stable in time of crisis, but it also come with our recommendation is that on a long run, Italian wines will develop. We have seen it with Sassicaia, we have seen it with other Italian wine as well. The top Tuscanies, the Barolos, they will develop extremely promising over time. I don't think that there has been so many hard hits on Italian wines that we have seen with Burgundy and Champagnes. So my general opinion is that Italian wine will stay more stable in the regions that we operate with, Tuscany, Barolo, etc. But in general, that is what I see with the Italian wines. It also leads to the category of rest of world. If we divide that into maybe US wines, I think that the coming months will decide where that will end. So I think we will wait and see how that one will develop. I'm quite sure that 100 Acres, Screaming Eagle, etc. Screaming Eagle has taken a hard hit as the top Burgundy as well. But in general, these American wines will stay in the same category as what I believe the Italian wine will do. And then we have our spirits that is a little bit more with a little bit more volatility. And maybe in a category that is similar to champagne.
Yeah, and if I can add to the Italian wines, what our data show is that during the financial crisis back in 2008, 9, 10, Italian wine was probably the most stable asset that we had in the wine industry. And I think the same can be said now, that Italian wine these days are proving to be the most stable asset in the wine industry. And maybe also we have the room for the best gains there, because Italian wine is not priced as high as many of the other asset classes that we are discussing here. Out of respect for time, I'll pick one question more. Dragging a bit around here. Anna Maria is asking, Anna Maria maybe, do you believe we have seen the worst, or are we still in the storm?
I hope so.
Yeah, me too.
That will be the quick answer to that one, Anna. I strongly believe that we have seen the worst. I think in general, when we're looking at the market, taking into perspective, we have seen a war in Europe. We have seen the Asian market with real estate, a trade war between the US and the rest of the world. I hope that all those categories, Middle East, I think in general what we can see over the last 2.5 years has been quite crazy from a general perspective. So I hope that what we will see here in the future is more light, and hopefully we will start to see more activities incoming in all categories. But that is my general opinion, that I do believe that that we have seen the worst period of this giving time.
Thank you, Rune. Out of respect for time, we are now approaching 40 minutes, which is a little bit more than we promised, Rune.
Yeah.
I hope that there are still some viewers out there. But from here, I would like to thank you all for taking the time to watch this webinar. And please give us your feedback. You're very welcome to reach out to me or to anyone from your team.
Yeah.
because the team is here for you. And Rune, I know you're ready to take questions also in the coming days.
I will be ready as always on the phone and on email if anybody has a question, or maybe we didn't come through the questions that you have been hoping for, then please reach out. But all these amazing people here are also waiting at the laptop and the phone to answer questions regarding the market. I would say that it is extremely important for us to be transparent, to give as much insight about this giving market here as possible. So therefore, call your advisor, book a meeting, have the conversation about maybe the whole portfolio, maybe some position, maybe you have had a huge drop on one position, maybe it has gained a lot, so should we sell it? I think and I hope that after this year you know that my question to that will be in both cases right now, no, wait. But in general, reach out, they will be ready, and we are expecting hopefully a lot of calls here in the coming period.
Well, thank you all for watching the webinar. And if you're hungry for more, I recommend that you go to rarewineinvest.com for more information, analysis, and investment tips. Bye-bye.
Bye.